Hello guys, welcome back to the channel, and I'm back with another video about our strategy. So guys, the strategy is simple: top down analysis plus demand and supply for entries. I'll just say top down analysis, or just say demand and supply, but it has top down analysis in it. We go from the high time frame dropping down to the lower time frame where we get our entries. So now I'm going to show you manipulations. This week we stopped out twice. Not that we were not correct, but the manipulations that happened this week are out of this world. And this is, someone said, this is the this is not the correct time for beginners to start learning forex, because it will take you to have a very strong psychology, a very strong mind, in order to maneuver through the markets of today. The markets of today are not as easy as those of those days. So if you're learning forex today, you'll have to be strong, you'll have to persevere, you'll have to learn how to endure being wrong most of the times, not because that you're not running the right way, but because the manipulation that are happening out of this world, with a lot of wars going on around the world, and also Trump being Trump. He's always going to be doing his thing, and that's why you always keep on seeing such manipulations. So I'll go straight to the charts. I'm going to be showing you GBP card, what happened, and then what is it called, and then Euro JPY also, what happened. Guys, I'm not happy with these people, but we proceed. That is it. So now subscribe, guys, subscribe. We're on the road to 300 subscribers, so subscribe to the channel, be part of the community, let's grow together. And then I'm going to be going straight to the chat and share the videos. I'll give you 5 seconds to subscribe, and then we proceed. Subscribe. Okay, so I hope you have subscribed, guys. So let's proceed. So first things first, what do we need to see? We need to go to the weekly time frame, or to our high time frame. If you're using the weekly, you can use the weekly as your high time frame. If you're using the daily, you can use the daily as your high time frame. If you're using the 4-hour, the same thing. So when we go to the weekly, what do we want to see? We want to see the trend of the market. What is the trend of the market? This is a bullish market, hyper bullish market. If you can't see this, then I don't know what you're seeing. So we have the market that's going to the upwards. So what do we give priorities? We give priorities to only buys. But does it mean we cannot sell? No, we can sell, but we sell while being cautious, because anytime price can hit a high time frame demand zone and quickly turn around and you be stopped out. Okay, so now what do we have here? We have GBP card, and this is the weekly time frame. So the trend is up. However, what is the immediate trend? The immediate trend was heading down. Good. So what do? We mark the opening and closing price of the previous week's candle. So this is the opening price. This is the closing price. After marking that, what else? We shall just put this, our blue bar, here. Okay, and then we go to down to the daily time frame. So what do you see on the daily time frame? Immediately when you reach on the daily time frame, you would see a demand zone here. This is an indecision candle, and this is a very huge candle, which shows there was high momentum here, buying momentum, which even broke structure here, so making it a valid demand zone. However, there was a jump here. Price jumped from here and then went up all the way, but it is not something that I had put into account, because my demand zone was valid at the time. Price was here. So what happened is, we go to the lower time frame, that is 4 hour, to see if we can refine further there was no any refining further on the lower time frame. The price action here was all efficient and was covered. The only open price action was around here. So it made sense that if we broke here, we were supposed to come here. You get the point? Okay. So now what happened? Where is the manipulation? Or why do I say there was manipulation? So price opened from here. Immediately open, it dropped into, there was a jump, it dropped into our demand zone, tried to buy, but we were not phased. Why? Because there was a trend line in play. Remember, in order to validate our demand and supply zones, we want to see price removing trend lines and also opposing supply zone. So if there was an opposing supply zone, it was supposed to be here. It was not removed. Price retraced, didn't even reach the trend line, and then dropped here. However, the moment price dropped here, now this is where I was stopped out, guys, and guys, you shouldn't laugh. The moment price dropped here and opened this, the closures of this bullish candle, I just knew we're in demand zone. I've seen what is it called, some bullish momentum or bullish signs, so I entered, then put my stop loss slightly below. I always put my stop loss slightly below the zone. Now what happened, guys? What happened? Price pushed down, took me out, and then immediately it took me out, started coming back. But when I saw price pushing down, I was like, what does it want to do? So when it went through my stop loss and closed down my stop loss, I just knew price was heading down to the weekly demand zone. However, that was not the case. Price wanted to manipulate people who put here their stop losses before it can go up. So it came down here, manipulated me. I thought it was even going further, then closed as a bullish candle, and then started going up, broke out of the trend line, retested, and then went all the way to the opening price of the week. Guys, I felt so bad. I felt bad about this trade because everything was aligning. It was indeed the right area to buy from, but price just did not accept for us to buy from that area. So everything was okay, but we just had to lose, and guys, I'm not happy. So that was a 1:2.4, and we lost that. I think around 45 pips. We had put a stop loss of 45 pips, and we lost that. So now that we lost that, was there any other way we would use to enter this trade? Yes, but that is not how I was thinking of, because everything was aligning. However, there is what we call a confirmation entry. So when price tapped in here, you went down to your lowest time frame, that is 1 hour, and then started looking for confirmation entries. How? You draw your trend line very clear, accurately from the top to the bottom, and then you tell yourself, if price is indeed going up, it has to come down here, then come back up the trend line. If it comes up the trend line, it has to remove opposing demand zones and then give me advanced zone I can enter from, which is here. So now how would you enter this trade ideally? So price came down like this and then started retracing up. So when it retraced up, it not only broke the trend line but removed this supply zone and removed also this supply zone. These are two supply zones that were removed, and then also broke the trend line. And remember, it is in our demand zone area. So we also had a QM. This is a low, high, lower, low, higher, high. So it gave us a demand zone here. Gave us a demand zone around this area here, and we are supposed to now do the actual buying. So the only way you would benefit from this trade, and with even a smaller stop loss, it was by using confirmation entries. Up to there, that would even be a 1:4 if you had used confirmation entries. But I would not like that was not something I thought of, so I was stopped out. but the trade ended up playing out well. So now what I would do is this was this was this is something that I would do. So next time if I see something like this, let me show you. Where is it? Let me go to the 4 hour. If I see something like this where I'm not sure or the trade is, you do not get a proper area of getting your entries from, I'll always use the confirmation entries. Always use the confirmation entries, because if you used a stop order, maybe if your stop loss was going to be huge, which will now negate the essence of the supply and demand theory. But if it was not going to be so, you had to wait for confirmation from this area. So your entry time frame is 4 hours, but you get your confirmation on the 1 hour. What do you see? What do you want to see with confirmations? You want to see supply zones being removed. You want to see demand zones being created. You want to see a trend line being removed. That is what you want to see for your demand zone. So I think next time that is what I'm going to be using. So that was all on GBP card, and I'm going to proceed to, I think it is Euro JPY. Yes, I'm going to proceed to Euro JPY. We had the same scenario. However, I don't think there was a confirmation entry on Euro JPY. So Euro JPY, these guys played on our minds. They played on our minds, but however, our analysis was correct, and if it wasn't for the manipulation, we would be good. So what do you do? First things first, when you open up the charts, you go to the highest time frame. When you go to the highest time frame, what are you looking for? You are looking for the trend of the market. So my highest time frame is always the weekly. So when I go to the weekly, I'm looking for the trend of the market. When I look at the trend here, it is crystal clear to anyone who is saying this is an uptrend. If I can draw this trend line, this is an uptrend, and I think that is the only one. This one will be so steep, you wouldn't want to draw a steep trend line like this, but this one just shows you that the uptrend is so in sync that you hardly even get a trend line to draw. So now if I realize that we are in an uptrend, what follows, guys? What follows now that you know we are in an uptrend? We know that is a supply zone up here that price is attacking in that uptrend that it is going. You see that drop, base, drop. So clear supply zone, and I know for the fact that when we reach here there's going to be a reaction, and I know that we are going to reach there, because there is no anything around here stopping price action to reach here. Okay, so now what is happening? We shall just go through the process and what really happened. So now the price is in an uptrend. What is the immediate price action? The immediate price action is bullish. So we marked the previous candle, opening price and closing price. After marking, let me just get my blue bar and we put it to this candle, because it is the present week, so I don't want us to be confused. I feel bad about these two trades, guys. I know they say that you don't have to feel bad about the trades, but guys, this is unavoidable on my end, because I was right on both occasions, but I was stopped out, or I was right, prepared, waited for my trades to reach there. They reached there and I was stopped out, guys. I hate forex manipulations. I hate them. Okay, so now what happened is after marking well, you drop to the daily. So we drop to the daily time frame to see what was there. So on the daily time frame, there was this is the one. Yes, this is the one. Yes, on the daily time frame, there was a demand zone, which was rally base rally demand zone. Okay, so we marked that zone. These candles are big. So we marked that zone. I was confused by the previous zone. Remember, previously we bought from here, price came, tapped us in, and then we went up, we bought from there. So there's another demand zone that was created here. However, However, I was stopped out. Why was I stopped out? It's because I ignored this week here. So after marking your demand zone like that, you go down to your entry time frame and refine the entries. So now what happened is on the we would refine the demand zone up to around here. And these are one of the trades I told you, high probability trades. When I see such trades, I always tend to enter full margin. High probability trades, you have support which turns into resistance, and then it gives you a demand zone, and then price goes up. When it comes back this demand zone, we are buying. Same thing that was on gold, same thing that I showed you on US oil. It worked on US oil twice. Even here it worked, but I was first stopped out. You see, when the thing is still there. So now what happened is there was a manipulation that happened. Price opened, went up, signaling that this was the opening price. We broke the closing price. We broke above the closing price. Coming back to retest on the closing price, we were stopped out. So this week here, someone will say, how would you know that the price was going to reach down there? Yes, you wouldn't know, but there was, if you checked on MT5, you see my trading view is not a paid version, so I only have the time frames. I only have 4 hours. I don't have 6 hours. I don't have 8 hours. So these are the times that I have as high time frames. So on the 6 hour, we were supposed to accommodate for that week, and that week was coming up to around here. There, that was the demand zone on the 6 hour. However, if you refined it to the 4 hour, we would not put into account this jump that happened before the market closed. So you're only marking here. So we were stopped out, guys. We were stopped out, and then price went direction. So what I learned there is, you even go to some of the time frames, like you have to make sure that most of the time frames align with your zone, because price might decide to use the high time frames demand. Yes, it knows it is going to buy from here, but where exactly, the precision. So if I had used the high time frames demand, I was going to be safe. Probably wouldn't even buy from Apple, to buy from in the middle here. But now, because I used this demand here, the manipulation happened. Those people decide to use the 6 hour, and then price shot up. And look at how far price moved from here, where we wanted to buy from. Price has moved 175 pips. So this would be 1 is to almost 3. 175 pips, guys. So we were right, but the manipulations took us out, and this is it. In Forex, you're always going to lose, not because you're wrong, but because of some circumstances that are unavoidable. So how do you go about them? Try to find out where the problem was. So me, I found out, and the problem was I did not factor in the high time frame demand zone. If I had factored in the high time frame demand zone, I was very good to go. Could you have used a confirmation entry on this trade? I don't know, but we can see it is something we can see. So we go to the lowest time frame, that is the 1 hour. So when you go to the 1 hour, what do you have? You have a trend line that is coming down to your demand zone, which is here. To your demand zone, which is there. Do we have supply zones that were taken out? Yes, we have one here. It was taken out by this price action, but now after it was taken out, there was no entry, because you have a demand zone of drop base rally here, but even this week had to be factored in. But even if it didn't, we had a demand zone of drop base rally here, and then price broke out, creating this. I think this was a demand zone, but it was so tight. Maybe you had to go to the 15-minute. I really want to go that low. Let me see if you can find something there. You see, guys, it is all about learning from your mistakes and then adjusting. There was no anything whatsoever, guys, for confirmation entries. So this trade was not going to give you confirmation, because even this that I had marked as a demand zone, I don't think it is one someone would take. If they wanted to take it, they would probably miss it, because it was so tight. However, this was the only confirmation we had there. So what did you have any entries in within? Yes, on the 15 minutes they were there. There's this one here, break of structure, demand zone. In an uptrend you entered from here and then price took you up. There's this one here, break of structure, demand zone, though the mover is not good, but it is one that worked. It took it up. This one was not tapped in. There is this one here, break of structure, demand zone, and then price went up because we're in an uptrend. So you see there, that one there. So we break this structure, broke this one, two huge candles moving away, and then you mark that very well, very well. Risking 7 pips to get 70, to get 78 pips. That is 1:10. You would get an easy 1:10 from there. Okay guys, so that is all. As long as price is trending, you're going to always going to get entries. So that is all on EuroJPY. We are not happy, we were stocked out, but we learned our lessons there. Okay guys, that is also, if you have not yet subscribed to the channel, kindly subscribe to the channel. I always post entertaining content and educative content. I'm also going to share a video about confirmation entries, confirmatory entries, so stay tuned for that one. It is going to be one of the best. And you see, if you can combine demand and supply, you see you have a zone that you're sure that we're buying from this zone, and then you see a confirmation. For this one, we only had a break of the trend line, but it is one that you'll be so skeptical. Yes, a trend line was broken. So now where do you enter from? Where do you enter from? You had nowhere to enter from. Or if you saw the trend line being broken, you would risk and enter immediately from this engulfing candle and then put your stop losses below. That is 56 pips. The risk reward wouldn't be good. The first target would be here, that is 1:6, and then you risk you target a 1:3, which would be a good one. But I wouldn't want to have a stop loss of this margin, but it would do. So guys, that is all for today. Yes, if you haven't subscribed, kindly subscribe, be part of the community. We're on the road to 300 subscribers. If you've liked the video, if you learned something about it, then you can like or share the video. That is all for today. Have a good day, guys. Have a nice weekend.